began making money in the stock market once I learned these three things. Number one, the market is highly efficient. The bell curve goes something like this. On the left, you've got individuals who understand the fact that the market is efficient. However, they think this means it's impossible to make money consistently against it. These are your non-traders. At the top of the bell curve, I would say are 90% of traders. These are people that believe the market is inefficiency and that they can discover some inefficiency that's going to turn them into billionaires. And on the far right is where you want to be. Someone that understands the market is efficient and understands that you can build statistical evidence strategies that can turn a profit against that efficiency. You give me just a little bit of your time and I promise you, I'm going to make you a better trader. I'm going to push you to the right side of that bell curve by the end of this video. In continuing the conversation of market efficiency, let's talk about what makes a profitable trader. This is my real trade journal from a period of time in which I was trading a very specific day trading strategy. Of course, you can see all the numbers here, but what I really want to jump into here is this detailed report section. First thing you may notice is my win percentage. I had a less than 37% win percentage with this strategy. And a lot of beginner traders or non-traders will look at that and go, wow, this is a terrible strategy. A lot of people look at traders to be fortune tellers. Like, we should always know what's going to happen in the stock market. And every time you're wrong, that's a loss. However, profitable trading is more than just win percentage. It is win percentage multiplied by risk reward. And if you look above, my average winning trade during this specific trading strategy was $369. My average losing trade was only $172. So on that kind of risk reward at a 37% win rate, of course, I made money over these few months. So always remember that equation. Win percentage multiplied by your risk to reward ratio. Your job as a trader is to find a small edge in that equation. You discover this edge through gathering data from both backtesting and forward testing your strategies. Backtesting, of course, is gathering where you would have entered and exited based off of your rule set, writing all that down, gathering the statistics. Forward testing is, of course, the journal I just showed you, journaling your real trades as you're taking them in real time. Forward testing is, of course, the more impactful data gathering, as this is when you're actually trading the real moving market. But backtesting is just as important in setting up that data gathering, because if you're not backtesting strategies before moving into the real money trade journaling of them, you are going to waste months and months of time forward testing dead-end strategies that never had a shot. Backtesting can be an extremely painstaking, tedious job, going through and finding every example of where you would enter and where you would exit across multiple different stocks and multiple different sectors to gather a good selection of market data. However, as you may have noticed from these charts I've been showing in the background of these clips, something that I discovered and something that I now teach on this YouTube channel is utilizing code to automate that backtesting. I can now create trade strategies that are, of course, simulating entrances and exits on the chart, and I have built also custom studies that automatically provide me with all of the backtest data I need on those charts as well. So now all I need to do is click through multiple different stocks and across multiple different selections of time periods and gather this data, write it down. Then I can go back in and I can quickly optimize, change some of the variables on the strategy, gather that same data, see if it gets better, see if it gets worse. Do that a handful of times. It takes me now a couple of hours to backtest a full strategy rather than where it used to take a couple weeks. And of course, if you're interested in this codified trading, which you should be, saving that much time should be interesting to you in your journey towards becoming a profitable trader, over on my website, daytradingstrategies.net, I have built a full course with over 36 videos that you can sign up and learn how to code yourself. Or, of course, I have also published now over 80 of my own codes that I use every single day. If you would like to just sign up and get access to those rather than learning how to do it yourself, that's available here under the R Codes tab. Once again, daytradingstrategies.net. It'll be linked in the description of this video down below. Lesson number 2 that I learned that helped turn me into a profitable trader is that you will never know the outcome of your next trade. Actually owe this lesson to the book Trading in the Zone by Mark Douglas, where he has over 100 mentions of the word outcome, and almost all of them are about uncertain outcomes or random outcomes. And what he means by this is, if you remember the statistics we talked about gathering in lesson number 1 when talking about market efficiency, those statistics only ring true over time, over large data sets. The strategy we're looking at here is my reversal strategy, and it does have a very high win percentage. However, does that mean that I am likely to win my next trade? Not exactly. Remember, that's not how statistics work. Taking one example and applying statistics to that means next to nothing. I want you to think about a casino. Casinos are all extremely profitable because the games all are in the house's odds. However, the house doesn't have large odds on most games. In a lot of games, the house only has a 1% edge. But when you apply that 1% edge over the millions of bets that happen at that casino, it becomes extremely profitable for the house. Then to begin to tie these two ideas together with not knowing what's going to happen in the next trade, but building an edge against a highly efficient market, your job is just to build yourself that very small edge, remember, in our win percentage times risk reward calculation, that over time gives you the house advantage against the stock market and allows for consistent profitability. And where the real understanding of lesson number 2 here, that you don't know the outcome of your next trade, comes in, is that this is going to allow you, once again, once you fully understand and embrace it, to stick to your trade strategy. How many times have you lost a trade, got upset, maybe you lost 3 or 4 or 5 trades in a row, get upset, start revenge trading, start over trading, start not following your trade plan because you're emotional about the losses, you want to make it back. Once you understand that you have no control over every single trade you take, your strategy has next to no control over. That's going to help you so much more easily stick to the plan. You know that, hey, I have proven in back testing and in forward testing that this strategy is profitable over time. Maybe I'm going through a cold streak right now, but that is all part of the plan. I see the strategy take losing trades. I know this is part of the strategy. I know this is part of the game. I'm going to lose trades. But as long as I stick to the strategy, once again, that I have worked and proven is going to make me money, it should all work out given enough time. What you then do to ensure that your strategy is working as expected over time is you obviously continue to journal your trades as we're doing here, and then you compare the statistics from your live trades to the statistics of your back test. This is a very similar strategy to the one I was live journaling. The live journaling one was my day trading strategy. I sort of took that same idea and applied it to swing trading. So I take much larger position sizes in swing trading. You'll notice the average win and average loss being way larger numbers, but focus on that win percentage there being 38%. If I come back and look at my win percentage here in my live trades at 37%, roughly at that sort of 2.5, 3 to 1 risk reward ratio as expected, once again, from my journaling. Hey, my journaling of my real trades is pretty much staying in line with what I expected from my back test. This strategy is continuing to plug away as expected. I shouldn't be concerned about the losing trades. It's doing what I think it's supposed to do. The third and final tip that I had to learn before I could become a consistently profitable trader is that no one, including yourself, knows what a stock is going to do. This sounds obvious, but it's very important to actually conceptualize and understand. What it really means is that you need to stop trying to live read charts. Like, stop trying to, during market open, analyze charts and think that you understand what's going to happen in real time. And I put this lesson last for a reason, as it ties in nicely to the first two lessons. Real profitable traders are trading statistics, not ideas. They're not trading based off of what they think is going to happen. They're trading based off of the statistics that they have proven, which we learned in lesson 1 about market efficiency, and they are staying true to those statistics, which we learned in lesson number 2, that they understand they can't control the outcome of the next trade. Really, the number one issue with this type of discretionary trading is that you don't have predefined exit criteria. You might say, hey, Amazon here is in an uptrend. I think I'm going to buy it on this dip. I'll get stopped out if it breaks below this low, and I'll sell if it breaks above 235 here. That's all fine and dandy and sounds like a good risk reward, but the number one question is, are you going to stick to that? The answer is almost always no, because you haven't done the work of proving the statistics, which builds the confidence to either hold or exit that trade where you are supposed to. And the number 2 problem is you haven't proven, once again, that formula of win percentage multiplied by risk reward. That could be a very solid trade idea. That could be the exact same trade idea that a system trader takes. But why a system trader is going to make money consistently over time? Because they know the average win percentage of that trade. And because of that, they know the risk reward they need to be taking with that trade in order to make money over time. So stop trying to guess where stocks are going to go and only trade proven statistical strategies that you yourself have gathered data around. If you would like access to my strategy so that you can begin to gather that data and get an idea of how the stock market works, once again, daytradingstrategies.net into our codes. I'm going to navigate into Thinkorswim, where I once again have over 80 published strategies, scanners, and even custom stock market studies. I'll show you how easy it is quickly to add any of these codes to your chart. Every single one of my codes is going to come with one of these share links. All you do, copy down that share link back within your Thinkorswim, set up, open shared item, paste, preview, and import. From there, all of the studies, all of the strategies that you import will be available from your normal edit studies modal. Type in DTS. I have prefixed all my codes with that nomenclature. Daytradingstrategies.net. Once again, go check it out. Go get signed up today. I promise you, it will help make you a better trader. Link in the description down below. And you're going to get access to everything, all 80 of my codes, for just $35 a month. And if you use coupon code TRADING at checkout, your first month will only even be $30. Once again, that's access to everything. I don't charge like extra money per code or anything. Once you sign up, you will get everything. And please don't feel locked in. I have it set up as a membership because I am always adding and updating codes every single week. But if you just want to sign up, download what's currently there, and then cancel, you can do so really easily with just 3 clicks under the My Account tab. Then there's also the course available on the website, which is a little bit more expensive, but it's going to take you from knowing literally nothing. You could have literally never seen a line of code before. It's going to take you from that level of understanding to being able to build anything you want within Thinkorswim. There are exactly 36 sections. Every single section comes with a custom video for that section, as well as a text write-up. Well worth the money. I don't think you're going to find value like this. I've done some price comparisons. I think I've priced mine at the best value on the internet for this type of education. And hopefully you all learned something in this video. I think I just covered 3 extremely important lessons that, once again, if you understand and fully conceptualize, I'm not saying you watch this video, now you're going to be a millionaire day trader, but you're definitely going to be a better trader and one that thinks about the market differently. Hopefully you take that to heart. Hopefully you enjoyed. If you did, please hit the like button. If you'd like to continue learning, make sure you're subscribed. And with all that being said, I'll catch you all in the next one.